pain is part of the ethos of this whole industry.
Unfortunately, that's true.
How much more pain is ahead?
No pain without gain. Markets are down. Gold is down below 5,000 per ounce. Bitcoin has fallen over 40% below 75,000 from its previous 2025 high, and even Ethereum is down over 30% in just the past month. A lot of news media that you see out there, they're going to just be telling you why the markets are down. What they are leaving out are the reasons you should not be selling and what assets you should be buying. I'm going to break those reasons down to you. If you're an investor, you don't want to miss out on this. Be courageous when others are fearful. First, let's look at the facts. Pause, take a breath, and don't hit the panic sell button. Don't let emotionally charged videos or news make you sell at a loss. And by facts, I mean the fundamentals. Let's look at the last 5 years of returns for Bitcoin, Ethereum, gold, and the S&P 500. Over the last 5 years, from 2021 to 2025, Bitcoin was up 200%, Ethereum 300%, gold 128%, and the S&P 500 was up over 80%. What does this tell you? If you had just bought these assets at the beginning of 2021 and held them to the end of 2025, you would have doubled the stock market returns with Bitcoin, more than tripled the stock market returns with Ethereum. Gold, you would be up 50% compared to the S&P 500. This shows the value of formulating an actual strategy based on fundamentals when you invest. Looking at these returns, now I want you to compare them to your personal portfolio and see whether you beat or underperformed these assets over the same time period. After looking at that, I assume many of us did not. Now I'm going to tell you why each of these assets are important going forward. For Bitcoin and gold, as I talked about in my Gold 2.0 video, these are some of the best assets when it comes to being a hedge against inflation. And inflation is coming. Whether you're looking at the military budget going up 50%, or whether you're looking at $200 billion being spent to lower mortgage interest rates, everything points to more spending, especially when the U.S. already has a debt that is approaching $40 trillion. Gold and Bitcoin remain the best hedges, and here are the reasons why. Scarcity. Both gold and Bitcoin are limited and have a finite supply. You can't make more gold, and there's only going to be 21 million Bitcoin ever created. Long-term store value. Gold is indestructible and basically lasts forever, and Bitcoin is on a decentralized, permissionless network of thousands of computers. Liquidity. Both gold and Bitcoin are used around the world as a medium of exchange. If you want to know which asset is slightly better to buy right now when looking at gold versus Bitcoin, Bitcoin is slightly cheaper historically, and also it beats out gold when it comes to things like accessibility, custody, and settlement. Bitcoin is widely accessible everywhere. Everyone can buy it versus gold. While some can buy ETFs and get exposure, a lot of people around the world cannot get physical delivery of gold. And this also ties into custody and settlement. With Bitcoin, if you have your own wallet, you immediately get custody granted by the blockchain. You have those private keys. You control your assets. It settles on the blockchain in a way that can't be reversed. Bitcoin retains those unique properties of gold of being finite, of being liquid, of being a store of value, while also solving gold's problems of custody, settlement, and accessibility. For Ethereum, with the upcoming Clarity Act or Crypto Market Structure Bill, as I stated before in my previous video, the U.S. doesn't really have a choice. This isn't optional. It's mandatory if the U.S. wants to remain globally competitive. One of the biggest beneficiaries is going to be Ethereum. Why? It's the number one in stablecoin supply. It's the number one in real world asset tokenization. It's been embraced by traditional finance companies already, such as SoFi building this USD stablecoin, JP Morgan issuing a tokenized fund. When the Clarity Act passes, a lot of transactions, volume, and assets will be on Ethereum. And from an adoption perspective, we are at the very early stage. JP Morgan is saying over 89% of family offices have less than 1% in crypto or digital assets. This is a huge opportunity to get in now before all the big players get in. Looking at JP Morgan's report, it's even more surprising that 20% see geopolitics as the number one risk, which gold and Bitcoin is a good hedge against that. 61% see inflation as one of the biggest risks to the US, also pointing towards Bitcoin and gold as ways to hedge. One of the things I was really surprised of is that only 17% prioritize crypto and digital assets. 41% prioritize infrastructure. What's unique about this is that Ethereum is actually infrastructure. It's not just a crypto and digital asset. Having two choices between owning a race car or owning the racetrack stadium that all the races are held at. Which one would you rather own? If one car goes down or if one driver doesn't perform well, that person loses. If you own the racetrack, you're going to win because no matter if 100 different drivers fail, people are going to keep coming back to race at that racetrack. And so you're going to win because that's where the activity is going to be at. To bring it back, a lot of the news media is saying, oh, crypto is down because of delevering or geopolitical uncertainty, but they're not pointing to the fundamental reasons why crypto will continue to do well. My message to you, focus on the fundamentals. Be courageous when others are scared. As I said before, compare your personal portfolio numbers to those of Bitcoin, Ethereum, gold, and the S&P 500 over the past 5 years. Let me know what you think in the comments. Did you beat them or did you not? Or maybe your favorite investor, did they beat them or did they not? Or if you would have been better off just buying and holding Bitcoin or Ethereum. And that's what's the angle. Focus on the fundamentals. Don't give in to fear. And if you enjoyed this video, hit the subscribe button and I'll see you next time.